Joining us right now is an analyst who will be on the call at the top of the hour. That's UBS retail analyst Michael Lasser. Michael, I spoke with Brian Cornell, the CEO, and he said while they did see some green shoots in areas like beauty and food and beverage, where beauty was up 6%, look, this is a real miss in terms of what they were expecting from the consumer. They thought the consumer was going to be in buying discretionary apparel and other items more than they really showed up in any numbers. It's a big hit, extra cost that came in during the quarter, too. What do you think?
What do I think is it's instructive to compare Walmart and Target in this situation. What we saw from Walmart yesterday was that it's executing on all cylinders, and one of the features of its model is now these alternative revenue streams that create some insulation for other factors within its business in the event that there are challenges. In fact, 1/3 of Walmart's overall profitability growth this quarter came from advertising revenue and membership fees. Those are two areas that Target under indexes in. And by virtue of not having those profit pools, Target's model is just more sensitive to hits and misses, especially when you consider that Target generates 1/3 of its sales from style categories, home and apparel. And those are going to be more sensitive to inventory obsolescence, different trends. And as a result, they may have to discount excess inventory to clear out. Then that's going to act as a hit to the margin. And that's what I think we saw with both of these retailers this quarter. Now, one last point, there is an opportunity with both. Walmart is on a multi-year journey where it's going to create shareholder value as it continues to execute this model. Target's a bit more of a volatile model, but it's reflected in its very inexpensive valuation. Just to put some perspective around that, I think there's still very good case that it can earn $10 of earnings next year. And with the stock trading at $125, $130 in the pre-market, it's 12.5 to 13 times earnings for what is still a retailer that generated more than 2% growth in traffic, more than 11% growth in digital sales in the quarter. So that's how we look at it right now.
Brian Cornell says that when they look at the consumer, they see a consumer that's on a budget right now. Very choiceful, he keeps saying, but on a budget. They're hopeful that that will change in the fourth quarter, that people will be drawn in by the holiday offerings. Are you enthusiastic about that idea or not?
I'm enthusiastic in general, Becky. I don't know if I'm enthusiastic about that idea. But what I do think is the consumer is steady right now. And I think it's reasonable to call it choiceful, where it's making very specific selections about what it wants to buy for both itself and for others. This, as we've well talked about, is going to be a short holiday period, which means that the retailers are going to have to do more with less. They're going to have to shrink more sales in a compressed time period. That is going to lend itself to an environment where there's going to be even more winners and even more losers. I do think that Target and Walmart will fit into the winners bucket. They're just too convenient. They have too many choices. The other thing that's going to happen is gift cards are going to be outsized winners in this category in this holiday season. It's just too convenient when you don't have an opportunity to go to the store. And Target and Walmart should be outsized beneficiaries of that as well.